Hello students, in our previous video we have elaborately discussed the GST part as to the basics of GST, input GST, output GST and the journal entries to handle the GST transactions. In this video we will be discussing on the ICI study material illustration 8 wherein the Rohit's adventures will be discussed in this case. So before we diving into the transactions and journal entries, let us remember our GST golden rules. So CGST and SGST will be applicable for intrastate transactions if it is within the same state. IGST will be applicable for interstate transactions for different states. Both equal to the same total GST rates. Matlab CGST and SGST have to be divided equally and we have to segregate the amounts. Think of CGST and SGST as like twins who always stick together, whereas IGST is the solo superhero who works alone. Let's jump into the transaction number 1. Rohit buys goods from Sahil for 50,000 rupees plus CGST and SGST at 9% each. Let's break this down like a pizza slice. So goods worth is 50,000 where CGST 9%, SGST 9%. So total will be 59,000. Like CGST, if we apply 9% on 50,000 rupees, it is 4,500 and SGST 4,500. The total will be 59,000. So the journal entry will be purchase account debit 50,000, input CGST account debit 4,500, input SGST account debit 4,500 and to Sahil account 59,000. So here purchase and expenditure increasing, we have to debit. Input CGST and SGST are assets, we have to debit when they are increasing. So and Sahil account, the supplier, we have to credit, we have to pay the total bill value including GST. And then next transaction is that Rohit buys from Sam for 40,000 rupees with 10% trade discount plus CGST and SGST at 9% each. Students, please remember trade discount should not be accounted in our books. In our previous video discussions we have explained this, and even in the case of GST also we should deduct the trade discount first and then calculate GST. So in this case, when the list price is 40,000, the trade discount 10% comes to the 4,000 rupees. So the net price will be 36,000. On that we have to calculate GST at 9% CGST and 9% SGST. So the GST calculation comes to 3,240 rupees each. So the journal entry will be purchase account debit, input CGST account debit, input SGST account debit to Sam account. And when Rohit pays 20,000 immediately, it means Sam account debited 20,000 to cash account 20,000. Rohit is paying Sam immediately, so the balance will be later, it will be settled. And moving on to the next transaction, Rohit takes 20,000 rupees goods for personal use. Originally bought with CGST and SGST, isn't it? At 9% each. So when goods go personal, so GST input tax credit has to be reversed. So isn't it? You remember our discussion that when it is not meant for selling purpose and if it is not used for selling, then you have to reverse the input CGST. So the journal entry will be drawings account debit to purchase account to input CGST account to input SGST account. So input CGST and SGST shows a debit balance. When we are reversing, we have to credit it. So always remember whether the value is including tax or excluding tax. So in this case, it is cost plus GST. Hence, we are reversing by calculating GST on the value 20,000. Moving on to the next transaction, Rohit pays rent 30,000 plus CGST and SGST at 6% each. Matlab it is a 12% GST where there is a split of 6% each. So the journal entry will be rent account debit, input CGST account debit, input SGST account debit to cash account. So the tax portion comes to 1,800 because on 30,000 if we calculate 6% it comes to 1,800. So 1,800 plus 1,800 we have to split up between CGST and SGST. Moving on to the next transaction, Rohit returns goods to Sam worth 5,000 rupees before 10% discount with CGST and SGST. So here in this case we have to calculate the return value first. So the return value here is 5,000 minus trade discount 10% is 500 rupees. So the net return value is 4,500. So the CGST portion comes to at 405 rupees at the rate of 9%. And similarly SGST is also 405 rupees. So the journal entry will be SAM account debited to purchase returns to input CGST and SGST account. So SAM account being a supplier, the liability is decreasing, we have to debit, whereas purchase returns is reduction in expenses, we have to credit. And whenever we are returning back the goods where we had claimed the input tax earlier, now we have to reverse it by crediting it because we have not used it for the business purpose. As simple as that. Moving on to the next transaction, Rohit buys furniture for 44,800 rupees including IGST at 12%. So the cash here is including. So far we have been calculating the GST on the taxable value, base value, but in this case the 44,800 is inclusive of IGST 12%. So the moment IGST is charged means it is an interstate transactions. We have bought it from another state dealer. So the amount, how to calculate, sir? In this case 44,800 is representing 112, isn't it? How do we get 112? 100 rupees if we consider as a base value, 12 rupees is the IGST and 112 is the total value. So 44,800 in this case it represents 112. So we have to calculate backwards to calculate how for 112 it is 44,800, for 100 it is how much. So it comes to around 40,000 and IGST portion comes to around 4,800. So the journal entry will be furniture account debit, input IGST account debit to cash or bank account. So furniture being an asset increasing, we have to debit, input IGST is an asset increasing, debit to cash or bank account is going out of the business, asset is decreasing, we have to credit. And the next transaction is Rohit buying machinery for 1,40,000 plus CGST and SGST at 9% each. So in this case it is a simple transaction where the GST is calculated on the base value. It is not inclusive, please remember. So the journal entry will be machinery account debit, input CGST account debit, input SGST account debit to Symphony Industries account. So machinery account 1,40,000. On that GST if we charge 9% it will come to 12,600. So we have to split it accordingly. And Symphony Industries is a liability we owe them, so we have to credit Symphony Industries 1,65,200. And in the transaction we are Rohit is making immediate payment of 1 lakh rupees. So Symphony Industries account debit 1 lakh rupees to cash or bank account 1 lakh rupees. So because Symphony Industries liability is decreasing, we have to debit, whereas cash is an asset decreasing, we have to credit. So remember the key takeaways of this particular problem. So trade discount to be deducted first and GST calculation second. CGST and SGST for the same state and IGST for different states. Personal withdrawals cost plus GST because you have to reverse the input tax credit. If it is inclusive of GST, work backwards by dividing it, and returns reverse everything, amount as well as GST. So hope you understood this particular problem. In our next video, we will be discussing on the illustration 9 of the ICA study material, Nidhi Traders. Until then, keep learning, keep watching our videos, and if you have any doubts, please get back to us, and don't forget to subscribe and like the video.